Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be your daily cryptocurrency market update, and we're really going to keep this one short and sweet. I'm pretty tired today, guys. It's been quite a full-on week for me already, and I'm getting sort of burnout from trading. However, we've got some interesting things to cover, and we're going to be trying to tell you what I think Bitcoin is going to do next. We're going to look at the dollar. We're going to look at a number of things, and we're going to really try and piece it together. Yesterday, we were spot on with a short squeeze taking place, and I really want to just start this video off by recapping and going over that again, because it was very obvious to me, and I want to... You guys that follow me are going to be different from the rest, right? That's my goal here, is to actually make you guys market analyzers, make you guys market technicians, and separate you from the masses. And I think what I want to start this video off with doing is explaining why it was quite obvious that we were going to get a rally yesterday and a short squeeze was going to take place. Because for me, whenever you see a record inflow of shorts at an area of support, it's quite obvious what's going to take place. You know, markets love to take money off people, and the reality of being a trader and investor is the majority of people lose money. So you don't want to be on the side of the majority, which means if the majority are doing something, you potentially want to do something else. Now, before I move on and we dive into yesterday, we're also going to be doing a little bit of TA. I'm really going to be also getting quite aggressive on the TA that I do and sorting out the wheat from the chaff. A lot of TA is nonsense, but TA does work, and anybody that doesn't think it does has never clearly studied it. Because if you study it and you can see the correlations and you can see the results of correct TA, you'll come to the conclusion that it absolutely does work and absolutely does give you a market edge and advantage in regards to trying to predict the price moving forwards. But on that topic that you want to be against the masses, one consistent comment that I get is, okay, well, everybody's bearish. They have to be right now, right? When all your big YouTubers come out and tell you Bitcoin's going to 10K or 5K or whatever it is, they've only just said that now. The second it goes, or we see some sort of an update, like today, which if we look at a zoomed out 3-day version is extremely insignificant. Maybe if you're day trading it and you've got leverage, you can make a bit of money off it, whatever. But people have recency syndrome or a recency bias. And with us, one reason that we're different, and this channel's different, and you guys that follow it are going to be different from the rest, is because we look at the full picture, okay? And then we work our way down the timelines and time frames, and then we come up with a short, mid to long-term bias. We have a short-term bias that can be very jumpy, have a mid-term that's a lot more stable, and we have a long-term bias that's a lot more grounded and takes us, you know, it's heavier. It takes a lot more force to move it. And the fact that people are bearish here doesn't mean that we're on the side of the masses. Okay, yes, people are bearish, but are they positioned in that to accommodate that? It's very interesting for me that every sell-off that we've had, that we've called since 44K, guys, we weren't the first out. We'll totally admit that, but we've certainly, you know, double, triple, quadruple, 10x some of our crypto bags if we were to get in today. People haven't actually positioned. Go and ask your barber who talks to you about Dogecoin every time you go and get your hair cut, if he sold his Doge. A lot of retailers still holding, and a lot of big players out there continue to bargain hunt in the basement full of ghouls and monsters. So they go, oh, well, this is a low. This is brilliant time to get in. You've seen it. All the big YouTubers, guys, we're going to buy here. They buy, puts a low. Oh, it's going down, guys. It's going down. Oh, okay, we're going to buy here. This is the low here. You're now at a new low, and you've got the same thing happening here today, guys. So in terms of an investment point of view, I don't think people are as bearish as potentially it seems. I think that there hasn't been real pain. There's been pain, but there hasn't been that kind of pain that leads people to give up. I remember in 2018, 2019, nobody wanted to talk to me about crypto. Couldn't even bring it up because people would, and that's kind of where I think we need to get to. And I think when you look at the sort of macro stance of things, which we're not really going to dwell on too much today, you know, this is the US personal savings rate. I am, unfortunately, I love to talk to people. I'm kind of nosy, I guess, maybe. And when I speak to people, it's a common concurrence that they really don't know what's around the corner, and they're only really just starting to, and some of them haven't even started to feel the effects of higher interest rate rises. It's our absolute opinion, and we're going to do a sole video on liquidity, and hopefully you guys are all up to date now that watch me daily on liquidity, money, and how it's the determining factor to a market of whether it goes up and down, obviously, is now having to get sucked out of markets and go back into to the debt markets. And at a more aggressive rate than I think we've ever seen, given the amount of debt that we have in relation to the interest rate. So, after that rather long-winded introduction, let's recap from where we were yesterday, and let's explain why you got a short squeeze here, and why you don't want to be at this size. So, there's a rule out there between people that trade: don't short support. It rhymes, often these do. The trend is your friend until the end, or whatever it may be. But you had support here. My patrons were all aware of this and aware of this bounce taking place. In fact, we traded it. Essentially, what you had happen was here, you had a hell of a lot of shorts building up, and then you get this wick as people take profit. So, for example, we were short, I think we were short Link on this down leg. And here we took profits because we said, okay, Bitcoin, you're probably going to get a bid here. We'd rather take the profits and get back in so that we know those profits are locked in. This is why you have this wick, and this is why you have this return move. This move is essentially just caused by people taking profits, not Michael Saylor buying, okay? Then, once people are taking profits, oh, well, are we going to keep bidding this? There's no reason to suggest it. You've sort of run into this level of support now flipped as resistance. You sell off. But what you do, and I want to take this off because this is one of my favorite patterns, is you put in a double bottom where your second bottom, that right butt cheek, is higher than the left. That kind of gives you a clue of which way things are going, right? You have record retail shorts here. What do you think is going to happen? The market's going to go, thank you. I'll take that money off you all day long and give it to somebody else who's more deserving. This is the game of being a trader and an investor, guys. It's all about you being right and somebody else being wrong. There has to be a buyer for your selling. There has to be a seller for your buying. You know, this is how it works. And then you get a massive short squeeze that is now taking you back into this range. Well, what do I think is going to ensue now? I'm going to bring the dollar up in just 1 second. People don't do market analysis like this, ladies and gentlemen, because they don't know how to. Because I hate continuing to say this, but the majority of people that talk about this stuff don't live it. They don't trade it. They're not really even investors, a lot of them. They just make money off talking about it and acting like they know what's taking place. So we had this pattern. You can call it a symmetrical triangle. By the way, symmetrical triangles, ladies and gentlemen, are typically trend continuation patterns, depending on how you want to draw this triangle. This was a symmetrical triangle. And you can see you had this kind of real low volatility here that led to that breakdown, right? The more important for me is this grind line. So trend lines are so important, guys. Trend lines are one of the fundamental staple parts of TA that you should watch, because they show when something's about to fall or when something's set in a certain direction. Now, very often with a trend line break, you get retests. And that, ladies and gentlemen, in my opinion, is what is happening today. So we flushed all those irresponsible shorts out. There's probably still a few here. So what the market usually will do is it will go, oh, okay, we're in resistance here. Let's get some more shorts on. And then it will go, zoop, I'll take all that liquidity from up here. All these shorts that are up here that are still potentially in. And then we'll ride it straight back down. This market will go lower, in my opinion, at least come in to put in a new, we've put in a new low here from this, but at least come down to 15K and actually fall, sub, in my opinion. But more than likely right now, you're moving up, you're coming for your retest. Okay? And then you're probably going to roll. And where's the Ellioticians in the house? I see lots of YouTubers do Elliott wave theory. I've not seen many of them trade it and get, be a successful trader off the back of Elliott wave theory. They might show you the waves, but I've not seen many people actually become profitable for it. Well, do we potentially have some sort of an Elliott wave theory going on here? And are we looking at an ABC correction or something along those lines? I don't know. I don't know how sort of prominent Elliott wave is on the sort of hourly to short-term time frames. Elliott wave theory does work. It kind of involves this whole kind of notion that markets move in waves, etc., etc. And, there is a degree of accuracy in it. I often find it's better on the larger time frames. But I think you're essentially looking at a retest of this grind line, and essentially you are looking to then eventually come down. Markets will take money off people, ladies and gentlemen, and this is one way they do it. You'll get spilled, then everyone will get super bearish. Oh, that's it, it's over. And then it will take all your money off you. you'll hit this trend line, and then you'll basically, you know, see the underbelly of it, essentially. This is kind of how things work. And just to reiterate things, guys, bring up our 3-day, the old trusty 3-day chart. You know, we spoke about this death cross. Still on the forefront of my mind. Even though what death cross you had here. You did have one here, but it sold off marginally. So maybe that's the case, but we'll see. You'll get a sort of coming up of this. You know, and we now had one here. These have all led to 50% sell-offs. Again, we've spoken about the fact that where we currently are, let's get rid of all these draws today, you know, is very, 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 very similar to what you did in 2018. So similar, you could literally overlay the bar pattern. They look perfectly similar. Yes, I do get criticism on that just because something looks similar doesn't mean it's going to play out. I agree. We say that, you know, we also say that we can continuously be wrong. You know, we just because I think something's going to happen. The beautiful thing about markets is you can determine who knows what they're talking about and who doesn't. And you can do that via who makes money and who doesn't. That simple. Again, the majority of these people out here talking about markets don't trade it. They don't make a living off it. They probably don't even make money off it. They make money off views and other such things, sponsorships and whatnot. And I can guarantee that, and without mentioning any names. So we'll see what happens. Again, I think small time frame, you're potentially just coming in here. Let's talk about the dollar actually very quickly. Small time frame, you're just coming in here and you are potentially just retesting this trend line. Very, very common. Maybe you get some sort of a flush out and then you go, or maybe you just sort of tickle it a little bit and then go. Let's talk about the dollar, because this is still a dollar story. The dollar is selling off. Well, I think the dollar's on for a reversal, guys. Let's get rid of these. I think potentially just do the big time frame and move down to the smaller ones. Again, one thing I want to reiterate is this looks ugly, right? Dollar fundamentally has every reason to continue going higher. Looked ugly back in 2001. This is the playbook I think you're currently going through. It's not going to be a straight road up, but you are going to start now. I think the dollar has bottomed, and I think you are now trending to the upside. I think we've got enough bidders in here. I also think dropping down to the 1 hour. Essentially got a reverse head and shoulders here. Let's be fair. Okay, you've come back for the retest of what was resistance. You've broken it. You're not really finding it as support, but it's very common that you overspill these and then you'll do something like that. This being a head and shoulders as well. You know, I potentially think this is the case. So I actually think the dollar could close in the green today. Stock market, let's put a few words in. You know, are you going to top out here? The stock market, in my opinion, is not too far off rolling. This is not the start of a bull market. This is a very, very textbook downtrend. Textbook. Look at where you are. You're around your 30 moving average. We'll talk about the 30 moving average in other videos. NASDAQ couldn't even get above it. This is a downtrend, ladies and gentlemen, with a relief rally that, you know, when the dollar turns around, the rest of the market will fall back into line and say, aye, aye, Sergeant, or whatever they say. I don't know. So that's really all I've got for you in this video, guys. I could have gone on about the macro forever and a day. Mortgage demand rises 2.2% as interest rates decline slightly. Happy days. So that might be people potentially trying to lock in interest rates. But yeah, we will see. On that note, guys, I'm going to love and leave you. Enjoy your Wednesday. It's been a wonderful one for me so far. I'll see you all in the next YouTube video. Thanks all for watching, guys.